Don't care who you are, young, old, adult, whatever it may be, having a good FICO score goes a long way for you. And I'm going to actually give you guys some keys to, when your credit score is good and you know how to make charges, you actually can live you can get a lot of freebies, so to speak. When you get to the point where you have credit and your credit is paying you back, going on vacations, flying, sometimes even internationally, right? But definitely within the nation for free, going to hotels for free. That's what having a good credit score creates for you. It creates a really great lifestyle. So welcome. I'm going to get started with the slide. Let me see. Okay. Okay. All right. What's wrong with this thing? Okay, I need to go to the basic. Okay, got it. All righty. So welcome. My name is Gary Nix with the Gary Nix team here at Keller Williams. I'm a realtor, really a broker associate for almost 2 decades. And my goal is to inform people to become better for themselves, for their family, and their community. So today, one of the things I find out in my walk of life that inhibits people from going forward in making good financial decisions is the credit score. My credit is bad or my credit is challenging. So we're going to go through why those credits are challenging and what we can do to make them better. But let's have some fun along the way, shall we? Okay. My co-presenter is Fernando Diaz. He will be here shortly with CMG. Is a loan broker. And this is just to give you the aspect of real estate, what are the things that's required, to have, to get a good loan, okay? So he'll have his inputs on it. But we want to start, I was starting with which one is this? Okay, hold on, let me just make sure. Where is the trivia question? I thought we were starting with the trivia questions, okay. All righty. Well, let's get into the mindset first. Okay. One of the things that inhibit us from doing great is our mind. They say our mind is a great place where things can happen or a place where things can unfold. And this is it's really important for us to understand, where do we need to be at? What's hindering us from achieving great? And I have the 3 myth understanding about credit, what we perceive about credit. Number 1 is people think I don't need credit. And the answer is yes, you can't do without credit. Well, let's take a look at that. Yes, you can live a life with no credit. You use cash for everything, but you live a limiting life, because if an emergency happens, you have to go up to the South, or you have to go back to Chicago, New York, wherever you come from, all right? You got to fly. Well, you're not going to take cash to the airline. You need to use credit with that, right? If you're driving nicely, all of a sudden you keep it driving, and all of a sudden, boom, your car, breaks. Good thing you have cash, but in most of the places you need credit, right? And so you can't really do without it. It's the real thing there, unless you want to live a limited life. The second myth that people have is, I don't want credit and be in debt to the man. And the truth is, you want good debt, and you can't have quality life without debt. We're going to talk about, well, we're not going to talk about real estate, but because I'm a real estate person, I'm always thinking real estate, right? Well, you know, if you are investing, for example, if you want to go buy stocks and you need 100,000 in stocks, you got to have $100,000 cash. But you go buy a house, you know, you could have $100,000 house, or you can just put $3,500 and buy the house. So you need credit. That credit still give you access to the house, but only $3,500 came out of your pocket, but you have the title to the house. That's the value of understanding that good debt matters. And that good debt you have, 10 years later, the $100,000 home is now $150,000. Now you've built wealth on it and you pay down the $3,500 that you initially put down. Maybe now you've paid another $10,000 out of the $100,000. You just have a wealth of $60,000. That's where good credit comes to apply. Okay. The third myth is I don't want to be too straight. I want to have an edgy life. In other words, when people think because you have credit, you are like constricted. You can't do anything that you want to do because you have to use credit. And the truth is, you can have a quality. Actually, you have the most quality life when having a good credit. So it doesn't debar you from having a good credit. It just shows you have wisdom. You just got to use your credit well. And that's what we're going to talk about today. Now, I really want you guys to see that no matter where you are, if you're a 500, I've dealt with people that are 458 in credit and taking them up to 700 plus, sometimes in a very short period of time. So we're going to explain how we get there. Okay. All right. So I don't know if this is this a slide I was trying to use? I'm sorry, because the slide that I have is not what I'm saying here.
Yes, that's.
It is one?
Yes.
Okay, where's my trivia?
It has to be on top, Gary.
So at the very top was the trivia?
Yes.
So we missed it. Okay, all right, let's go to the trivia. I want to kind of get interaction before I go into explaining all this stuff about the credit. This is for a Starbucks card, okay? So first question is, what FICO score is considered a good range? Now you have bad, good, excellent, yeah. So what are the range that you have to be a good range? Is it A, 600 to 640, B, 640 to 680, or C, 680 to 720? Okay, let's see who's on the chat. A, B, C. Well, none of you got it right there. A good range is more like 640 to 680. That would be a B. Okay, not on that one. Nobody got it on that one. Okay, so number two. Can you give me the 3 trade lines used by credit? 3 trade lines used by creditors to, so I don't put it down. Let's see. 3 trade lines. This is for a Starbucks card. Okay. Anybody? Well, okay, I think I'm missing that part now. I don't see it in your chat. Okay, somebody just say it loud, please. Can somebody come on and turn their audio on? What are the 3 trade lines used to measure credit?
TransUnion, Expedia, and oh my gosh, I forgot the last one.
Processing cost media and
Okay. Next person, Miss Ranji.
oh, I know we freeze my husband's on those three items, but I just remember also those ones that Shadi answered. There's another one. Yeah.
Yeah,
It's
there's a
around
third one, TransUnion, Expedia, and
experience and
I forgot that.
Okay,
Yeah.
well, you two ladies have given it a chance. Let's see. Anybody else want to give it a shot?
one.
Equifax, TransUnion,
Experience.
and
Yes,
Experian.
yes.
Experience.
Thank you,
Equifax.
Mr.
Yeah.
Adenaya got that. Okay, you get the card.
Equifax. Yeah, that's
Thank
true.
you.
Equifax,
Equifax,
yeah.
Good
TransUnion.
morning.
Okay, awesome. All right, so let's go back to the slide. Okay. Oh, Jesus. How do I know? Okay. All right. So let's imagine a world of endless possibilities where you get the best of everything you want. You reserve the best sitting on the table. And when we say you suffer less than anyone, that means, life is going to have issues for everybody, but because you are special, yours is less issue. You get considered for anything you want. If you decide, hey, I want to get a brand new car, it's given to you. You want to go to the best hotel, it's given to you. Uh, uh, Basically, the life of a prince or a princess. Nothing comes easy, but everything are results of your choices. So let me kind of bring this up, what good credit does for you. Okay. Now, two brothers are buying the same type of car, worth $50,000. Interesting. The last car I just bought is about 50 grand. And both are, both put the same amount of money down. And this is what, a good credit does for you. So to kind of move quickly through this, one brother that doesn't have a good credit, even though he's putting the same amount of money down, is making an 822 payment. The other one that has good credit is making a payment of 616. Now, this is like for a 5-year or 6-year term. Can anybody tell me the quality of life you can have with extra, basically about $200 available in your pocket every month? What can you do with that every month? A lot of things. I mean, number one, if you take your family to the movies,
vacation.
well, I don't know about $200 a month for vacation.
Shopping.
Shopping, definitely. You can do shopping.
Your gas for the period of going there and there, your gas
Absolutely.
of car.
Yeah, you can fill up your gas 4 times in a month with that, right? Without
Yeah,
having to
that's
come
true.
extra money. This other person got to come up with that extra money. You have it available. That's the quality of life that we're talking about when we have this good credit, right? Now let's explore a little bit more. In buying a home, one person buying what do we have this? A home, putting the same amount of down payment again, one with a FICO score, of the same lower FICO score, having a $39.99, $4,000 payment, and the other one a $3,500 payment. So now we're talking a home. This is for 30 years, right? So that's $500 savings every month for 30 years. What quality of life? You can literally take a vacation. I remember the first vacation I took with my family many years back. We had a $500 budget. It was a family of 5, and we went to Vegas, and we had a pretty good time, and the kids, they still remember that vacation until today. I mean, kids are grown up people now, but they still remember that vacation until today because that was the budget we had, $500 for hotel, spending, heating, and everything. and we still made it work. But imagine one can have that kind of experience literally every month for 30 years. What quality of life is that going to give us? It's going to be a whole lot better than what we possibly could have, right? So this is where we're talking about why good quality credit matters. Okay. So like we said, the trade lines are from Experian, Equifax, and TransUnion. Now, depending on what area you're looking to explore, retail, buying a car, buying a house, they all favor different kind of specific ones. But in most cases, we'll look at the average of the three. Okay. So a trade line is a record of activity and type of credit extended to a borrower and reported to a credit report agency. That's a specific trade line, right? And the power is in our hands, what these trade lines can do for us. And how is that? Well, what I find out is what's really impeding a lot of people is communication. Is communication. The ability to take a call, when you see your credit score calling, answering the call. That's really, I mean, I can tell you one thing that just happened to me. I just bought a Lexus, and my first payment, I thought I'd make the payment, and it was done. So I got a call. The first time I got a call, a missed call from Lexus Financial, I'm like, what the hell they're calling me? I already make their payment. Well, the second time I got the call, I said, let me answer this phone. And I answered the phone, and they're like, Mr. Nix, we didn't see your payment. I'm like, I went to your website, I created this thing, it was done. It went through. And the guy said no. So I went back in, I'm like, okay, stay on, let me go through what I went through. And we find out I didn't complete it, right? So luckily, I answered that call the second time. Usually, if you don't answer the call, that's when it becomes 30 days late, right? And those little things, create where we have a stinge in our credit that brings our credit down. And we'll talk about what brings the credit down, all that stuff. Okay, so answering every call from your creditor is really the key. Don't be afraid. I want everybody to know, if somebody's been telling you a lie that the creditors wants to kill you, want to do anything to you, that is so wrong. They are there to help you. They really want to help you, but you got to give them your story. You got to give them your story to help. Now, yeah, some of them are tougher than others, okay? But overall, if you tell them your story, they will work with you, okay? So communication is always the key. You answer the call, you tell them your story. I just closed on a couple that on their house, they didn't pay mortgage for 6 months. Unfortunately, they were going through divorce. But I told them, you don't, let's not mess up your credit. That's what you cannot do. You've established this thing for so long, and the house is almost paid for anyway. But again, when people are angry with one another, they don't want to listen. But I got them to let's do this. We called the bank, and the bank put on hold for 6 months. They didn't make a payment. Our credit was 746 when I ran it after the close of escrow. All because of communication. Now, if you don't communicate and you have 6 months late, boom, you're in the 500 credit history. So that's what I'm trying to let people know, that it doesn't matter what given situation. If you answer the call or you explain your situation to the financial institution, they will work with you. They really want to. It's that when you don't answer their call, they don't have no choice but to report what it is. And then it becomes a little more harder to get them back to take it off. Okay. All right. So respond to every threat of collection. So when they've called and called and called and you didn't answer the phone, and they will email you. Then they send a letter threatening collection, not meaning collection comes on right away. Please, if for whatever reason, because I understand people don't answer their phone, you got, spam callers and all that stuff. If for whatever reason you get a letter saying a threat that you're going to be going on collection, take that serious. You got to answer that, because when they give you that time frame and you miss that, then you have, other interest charged to your account. Okay. So here are the facts we want to know to make things better. So we talk about our credit rating, when it's considered very poor, fair, good, and excellent, right? So it doesn't matter, obviously we are in the 400 to 500, you're very poor. In the 500 to 600, you're still pretty poor. 600 to 640, you're on the fair credit, and 640 to 680, you're in the good credit. And then you start going to excellent once you go, really 720 and above, okay? Every fully charged, so the reason why our credit goes down, let me say it like that, is you don't ever fully charge your credit. What does that mean? If you have a line of credit of $1,000, don't charge $1,000. If you have a line of credit of 5,000, 20,000, whatever that may be, don't fully charge it. Instead, ask for a raise before you charge it. Okay, and I want to be full on disclosure with people, because we all go through this, and I just went through this. I haven't had a bad fall in my business in a long time, but I went through that this past month, and I'm like, okay, because I've built, to be a good teacher, to be a good student, you got to be a teacher. When I started teaching how to get to 800, I got my credit to 826, which is phenomenal, right? But then, you run through pitfalls in the business, and I kind of saw it coming. And I have a credit line that's pretty good, but I knew that I need to put some charges on it so that I do not fall behind. So I called the bank and said, look, I need an extension on my credit line. And they're like, why do you've never used what you got? I said, don't worry about that. I need an extension. And they gave me a little extension, not much, not what I really wanted, but they still give me extra $7,500. But just lo and behold, I knew I was going to hit the fall where I'm going to use a lot of those credit. Even with them extending me $7,500, I almost fully charge it up. Okay. Now, thank God it's gone down to halfway now. But if I didn't have that, I would have gone over, and that's what brings your credit way down. It can drop you down 100 points like that. And we really have to be conscious about these things, that if you have $1,000 credit line and life happens and you need to charge that amount, before you get there, call the bank. Again, they want to work with you. Actually, I was surprised this time around. I only got very little of what I wanted. Normally, I'll get anything I ask them to do. But whatever it is, if you do that in preparation for that, you still feel a hit, but it won't be a bad hit. Okay. So you want to keep your revolving account under 30% as much as possible. This, just keeping it under 30% is going to keep you floating in the 740 to 780 FICO score. If you're keeping your balances, no matter what the balances is, keep it under 30%, and then when you can't pay it down or pay it off, and keep it going like that. If you keep it under 30% on all your credit across the board, you're guaranteed to be over 740. Okay. Now, the biggest thing that hits people is late payments. This is just 30 days late. Like I said, I almost got one recently, right? And now I was not because I don't have the money to pay it, because I paid it, or at least I thought I paid it, right? With all this internet and computer stuff, and you think you got it done and you didn't really get it done, right? So, but don't be, now I'm gonna tell you guys a key. Most of these banks, they don't even report you for 30 days late. By the time they report you for 30 days late, you are actually 60 days late. In most of them, not all of them, there is some few banks, Symphony Bank, I won't mess with them at all. If you're 1 day late, they're gonna report you. But most of the other banks do not report you for that late. It's if you're 30 days late, they will let you know, hey, you know, you missed your payment. They will charge you whatever extra late $30, $40 thing, but they won't actually report you. If you're 60 days late, then they will report you 30 days late. So really, we all can avoid the 30 days late by just making that payment when we are allotted to, right? Okay. So sometimes, you know, life happen, we can't control what life happen. You know, sometimes you have life issues, you know, family death, emergency travel, emergency, these, you know, kids in the hospital bill that you didn't expect, you know, because we well don't expect to be sick, but every now and then our body fails us and we have to respond to it. You know, you have a toothache that you weren't planning, now you have to go to the dentist, and now it's a $8,000 bill that you weren't expecting. Those things happen. The key thing is to talk with someone, communicate with your lender, and say, hey, I'm at a dental office. They got to do a root canal for me. It's $8,000 job. I have a $5,000 credit limit. Can you up my credit, you know, to $10,000 so it can cover what I need? You know, whatever that is. If you communicate with them, honestly, somebody gonna work with you, and we have to be persistent in what we're looking for too, of course. So,
always do a raffle at the end.
how do we establish credit? Now, this is from, I've had people that come to me with zero credit, you know, adults with zero credit, nothing, ghost, no inquiry, no nothing. But that's okay. The easier way to go from 0 to 660 is to get a secure credit card. What is a secure credit card? You go to two banks I know for sure does it. There's small banks that do it now, but Wells Fargo and Bank of America, you go there. The only thing that frustrates me is when I recommend people to do it and they've misused it after getting it. So when you go and get a secure credit card, yeah, you're giving them your money to open the account for you, $300, $500, $1,000, whatever that may be, right? But don't assume it's still your money once you give it to them. Assume it's their money and you got to pay it down like everything else. So if you have zero credit and you go open a secure credit card, you want to activate that card. They're going to send you the card within 7 days. You want to activate the card and charge something on it and then pay it down, not to zero, keep like $10 balance, you know, and boom, you can go from 0 to 660 like that. So a lot of young people, that's where I tell them to go get started. So now that will immediately get you to establish credit. You know, we'll talk about keeping your credit, you know, under 30%. In the beginning, I'll keep it under 10% for sure. And then to blow you up from 660 to a 7, I had a young lady came to me, no credit, and within 30 days of doing these two things, open a secure credit card, and then her mom had her to a card. That girl went to 768, literally in 30 days. So opening a credit card and being an authorized user on somebody else's card. It doesn't have to be your mom, your partner, your sister, your brother, whatever that may be. It's helping each other out, right? And the credit go way up like that. Okay. Now, if you have a bad credit, that's a little bit different. So that means you have some established credits. And what happened is either you have lates or you have collections that's taking you to bad, where now you're in the 558, 548. That's usually, the credit is really like, mathematical analysis of your spending habits, right? So to go from bad credit to good, number one, be willing to settle your collections. A lot of people go into the default mode like, no, that's not me. Maybe a cable company put a collection on you. Don't sweat it, just take it off. And a lot of time they will settle for you. Meaning if Verizon, AT&T, or cable company put a $100 charge or $200 charge on your card because you returned the equipment or you didn't bring the equipment, whatever that may be. Just settle it like, okay, how much do I need to pay you to take it off my record and to delete it off my record? If you can settle for 50%, 60% of it, do that. It's worth it. It takes that bad credit off of your trade lines. And then the number two thing is really starting from where you are, decide not to be late on any credit. That's the number one key factor. And when you are late, it takes 12 months of being good for you to get back to where you are before. Let me say that again. When you are late on a trade line, it takes 12 months of being good to get back to where you are before. So you really want to not be late. If you have to make the minimum payment, I know all of us don't like to make the minimum payment. You owe $1,000. They tell you to pay $40 minimum. You don't want to pay that. You want to pay $200. But if you don't have the $200, make the minimum payment. It still keeps your credit good. You have interest charge on you, but it keeps your credit good. So that's the key for us to know. And then as we get better, we want to keep our balances down, right? Again, life happens, I just had a situation where on my trade line almost went 100%. But as soon as I can, boom, it's under 50% like that, right? Under 30%, under 10%, down to zero. So you want to bring it as low as quickly as you can, under 30%. That keeps you in the 750 to 760. Now, interesting, even though I had one card that was charged for, my 820 dropped to 779 because I have a lot of other good ones. So when you have a lot of the other good ones, it still doesn't drop you up as much. But if you don't, it can drop you up, 100 points like that. And then just remember to communicate with your lender calls and or letters, and never let anything go to collection. All right. Getting from good to great. Okay, so you are one that you make sure you're never late. You're keeping your balances now under 10%. Now, overall spectrum of balances, let's say you have 6 credit lines or 6 trade lines, right? So one may be a little bit higher, but overall, let's say you have 10,000 here, 5,000 here, 1,000 there, 5, whatever that is. You're keeping your overall, they look at your overall credit availability and credit usage. So you want to keep them as low as 10% when possible. Keep it going. You can't say because you don't want to use credit. I have a Target card. I hardly ever use it, but I go back there to use it for whatever. Like, okay, let me go to Target. And they've sent me letters like, oh, we're going to cancel your credit because you don't use it. Like, oh, no. I'm going to quickly go there and go buy somebody something, for $50 at Target. So I can keep my credit going because I've had it there for almost 30 years now. So you want to keep your credit going, and the longer the credit, you keep your credit, the better. That's what, that's what's got me to the 800. And again, this is where I find out from people that have 800 FICO score. They keep their credit for a long time. I'm like, okay, I'm gonna keep those going. And now you join that club. So just make them active from time to time, and you'll be good. So the habits that we do create the lifestyle we have. The habits that we do create the lifestyle we have. So you want to change your bad habits to form good ones. I always like people to know you deserve a great life. So choose that wise part. Choose to be great. Change your thinking, change your world. If we started this seminar with the nuances that inhibits people from going forward. We have to choose not to be like that in order for us to see a different result. Fernando, is Fernando on now?
Yeah.
Oh, okay, thank you. Let me see. All right, so let me just talk about, where are we in time? I'm sorry. All right, cool. Well, Fernando, you want to come in terms of credit, what you guys see as a lender, how it can affect people, that kind of stuff?
Yeah. So, well, I've heard some of the stuff that you're talking about, which is on point. But more importantly, guys, credit in terms of the lending world here for homes is a huge part, obviously, of the process. And in a lot of cases, depending on your credit score, it can affect obviously your interest rate and also your mortgage insurance cost. If you're going to have mortgage insurance, which basically is if you put under 20% down in a lot of cases, hypothetically, it affects all of that across the board, which means that you're going to pay a higher interest rate, higher monthly mortgage insurance costs. And obviously that's going to make, the payment situation a little bit more uncomfortable than it could be if you had top tier credit. The other thing to remember is this. On the Fannie Mae, Freddie Mac side, which is conventional loans, you guys have probably heard of that. At the beginning of the year, they changed their credit criteria. So what I mean by that is, if you go, let's say 12 months back or before that, a 740 score or higher was considered top tier for them. Okay. But then this year, it changed to 780 or higher. So they've also increased their requirements on that side. Now, government loans and stuff like that, they don't have strict requirements like that or as strict, but I don't want to get into that because it's just about credit. But it just goes to show you the level of the severity now, especially with them changing their parameters and stuff, how it can affect you in a positive way or a negative way, depending on how you take care of it.
Awesome. Thank you for sharing.
Mm-hmm.
So let me kind of help people a little bit one more here. So we talk about programming of our mind. What is the programming? Is the programming of our mind is basically what we know, what people have told us, what people around us have done. We all tend to do what we've seen people around us done, our parents do, our uncles, aunties, whatever do, right? That's what we know. That's how we think. And because we think like that, we feel like that, and we act the same way. And guess what? You're going to get the same result that you've always gotten. But if you can allow this new light, that's why we put a new light bulb to come in, which is new programming. And now you have a different knowledge. Now you're thinking differently. And because you're thinking differently, you feel differently, you act differently, and you get a different result. Really important for you guys to see that we can give you information, but if your hands is closed, you're not going to get that information in, right? But if you open your hands to it, you're going to be able to pull that new information in. So that's what we're hoping you guys will do today. So how do we live the best life possible? Like a queen and king and prince that we deserve to be, right? Well, let's talk about how we can dispute these credits. Again, today is talking about how we can take our credit from wherever we are to taking it higher, right? I wanted to give you guys the key ways you can dispute your bad credits. Number one is hire a professional. You have people that are in line to do this. I'm sure you all can Google people that will help you fix the credit. But I also want to give you an insight to what they do. And don't think you can do it all by yourself. Some you can do. It depends on what level, okay? But others, you probably need a professional to do it. Number one, you write letters in a 30 days turnaround. This is why we all don't have, I know I don't have that discipline to write a letter with 30 days, counting the 30 days, and trying to write another letter back. Professionals will do that for you because they have their structure. So if you write a letter and say, hey, this credit is not right, I'm disputing it, it wasn't me, blah, blah, they'll ask that you show it's you that's, challenging the letter, blah, blah. And if in 30 days they don't respond back to you, then you can write to the three trading companies to take that thing off of your record. So it takes a little bit of work. That's why you kind of want to hire a professional, but you can do it online too. I know a lot of these young people are pretty good online, right? The other part is to settle the collections. I really prefer this method because it goes away right away. And you don't have to settle for the full amount. Your old collections, most of the time they sell it to a collection company. You may owe $2,000. They sell it to the collection company for $200, and the collection company try to get as much as they can off of it, right? So most of the time, around 50, maybe 40%, sometimes a little harder companies, 60% of the actual worth of the collection you'll settle for, and it's gone. They will give you a letter, and you can have that letter I used to have it removed. And some of them are even good. Always ask them, can you give me a deletion? Can you delete it from my file? If you can get that, that's super great because it's gone completely, okay? Then the third level, and I don't recommend this unless it's a big, what we call a big debt is a judgment, a short sale, a bankruptcy, a foreclosure on your record. You seek a lawsuit to remove it. Again, you can only seek this lawsuit after those files are closed, not an active file, okay? And it costs a little bit more this way because now you're paying an attorney, their time, it could be $5,000, anywhere from $3,500 to $5,000. But this will be removed forever too, okay? Now, climbing the ladder of great credit, okay? This is just habits that we want to talk about, how you climb that ladder, the little steps you take to get your credit much better every day. Okay. If you generally pay on time and no late, you will hover your credit between 640 to 680, no matter what your balances are, okay? If your balance is 10% or low and you keep good usage of your credit, you're gonna go to 800 FICO score, okay? Really simple way to be at 800 FICO score is you use your credit and you pay. You use your credit, but honestly, I've never really done that, and I got to 826 because I always have credit. I think keeping it under 10% is really, really good, and you're using different credits because now they know that you are managing different credits, and it was what is going to keep you really high on your credit score. If you have a good, what do I put down here? Let's see what I say. If you have a good user and still maintain your revolving credit, again, you will maintain a full 800 to 850 FICO score. That's just, it's given. All right, I think that's the end of my slide. Any questions? All right.
Yes, I do.
comments?
Good morning.
Yeah,
Good morning.
I'm Caroline Adewale. Thank you for allowing us to listen to this. My FICO score is pretty good until when I co-sign for somebody buying a car. And they're supposed to be paying, but most of the time they don't pay on time. When I realize that, I have to withdraw money from my savings to pay. Then I wanted to refinance my house so that when look on all those, he said, you co-sign for this and co-sign for this, we cannot refinance your house at the rate you are requesting. And the person that I co-signed, she was able to refinance her house. Then I get a little bit upset because, I mean, now it's really affecting my score. Is there a way I can get my name off from the paper I sign so that I'll be solely on them? How do I go about it? Thank you.
Okay. Fernando, want to make a comment on that?
Yeah, well, the first thing I would do is reach out to that creditor that you guys have or on it,
Okay.
and the person that you helped, and
Okay.
see if they can refinance it into their name alone. That way you're officially completely removed from it.
Oh, I see.
That would be your best bet, I would say, or the best thing that you could do.
Okay.
You know, secondly, obviously we don't know the disposition of where it stands right now,
Yeah.
to further comment on it, but that would be the most helpful thing. I don't know, Gary, anything else you think on that?
No, I agree with you. I think that's the easiest way to go. Just especially, obviously, they've established some credit too.
Okay.
Besides this trade line, they must have had another trade line for them to be able to refinance their home. So
Okay.
just if they take your name off of it,
Yeah.
now all that trade line is gone. All the lates that's reported on that trade line is gone, and now
Okay.
you're back to your good self, and
Okay.
you can have a
You
much better.
okay? I have another question quickly. You mentioned that we should pay less than 10%, just like a Target card. I use it most of the time because I get a 5% they give to you when you use their card. Immediately I buy it with their card, I go straight to customer service and pay it off. Is that a bad thing to do?
No, that's actually a great thing.
Okay.
That's a
And
super great thing. Yeah.
if you have another credit, when they send it, I usually take a picture of my receipt and I call the company and pay right away. Will that also increase your FICO score by paying right away, or you have to pay the minimum in order to have your credit score increase?
No. And what you're doing is exactly what you should be doing.
Okay.
Those people that do have 800 and above is because they have a lot of usage, but they
Okay.
pay it off. You know, back in the old days when you have a Amex card,
Yeah.
no matter what you charge to it, you got to pay it off, in 30 days when it's due. So
Okay.
if you do all of your credit like that, you're always going to have a much higher FICO score.
Okay. Thank you so much.
You're welcome. Any other questions?
Oh,
I know there are some limiting things that people are coming through, and we just want you to feel free.
Yes, I have a question. Sorry.
Okay.
Yeah, so for one of my cards, I've never done a balance transfer before. So I did a balance transfer for the first time, and I didn't know that I was going to empty one account to take care of all the other accounts. So I think what you mentioned now about first calling them to increase your limit, would that have helped me?
Yes, if you obviously you've been doing good for the bank to offer you a balance transfer at 0% for maybe 1 year or something like that.
Yes.
Now, what you have to be careful is, even though you're doing the transfer, they're pulling the transfer from all this other credit card. Make sure the new balance you're gonna have is still under 50%. So
I didn't know.
way,
I pulled everything out, so I'm I didn't know one before I did it. It was
Okay.
it was afterwards I found out that this other account is kind of almost empty. And I'm like, oh, is this what balance transfer does? I've never done it before. I just thought that was
No, I mean,
you weird.
it's anything you wanted to transfer to the account. So
Yes.
what you just got to make sure is your new account. Let's say they offer you you transfer accounts as 5,000, 5,000, and 3,000 to this account.
Mm-hmm.
Even though they give you a check to pay them all off, right?
Yes,
You
yes.
also have to make sure in that new account, what's
Yeah.
your credit limit? Is it way over the amount? Otherwise, ask for it first before you do
Yes.
the transfer. You know,
Thank you. Thank you. I never knew that.
if you do the
just-
transfer and now you're over the credit limit, it's actually
Mm.
going to ding you your credit really bad.
It did. It
Yeah.
did. Bring
You
me
know, so
back.
yeah,
So I just learned from you today that we could make a phone call first to have maybe like increase that part first before we do anything.
right.
Thank you.
Thank you. That's exactly what this forum is for us to do stuff that's going to make us better, you know, and hopefully this is new programming, new information that's come in, and it's going to allow us to do better. Anybody else have any question before
Yes.
we go into our raffle?
I have a question.
Okay.
Is it bad to use like 80% of your credit card, even if you pay it off?
Okay. Say that again.
Is it bad to use 80% of your credit card balance, even if you plan to pay it off?
No, it's fine. So long as you're less than 100% and you're going to plan on paying it off as soon as possible, that's fine. You know, the Harley, I mean, Fernando, do you have any comment on that?
No, you're fine. So for example, if you have a credit card that has $1,000 balance, and let's just say this month you run it up to 950, as long as you pay it off as you're getting your next cycle every time, you should be okay.
Yeah.
If you're paying it off. But if you keep the balance for 90 days, 120 days plus, then that's when it can start affecting your credit. But if you're paying it off consistently or bringing it down under 10% consistently every month, you should be fine.
Should I leave a 10% balance or no?
If you don't have a lot of established other credit, I would say leaving a little bit on there is good, because obviously history matters too. So having some kind of credit history matters. It helps.
Okay, thank you.
I have a question for you. It's about parent loan. Obviously, it's a government loan. Is there anything one can do about government loan, like parent loan, to lower it or to work something out with them so it doesn't show any negative on the score?
And truthfully, with all my kids, as soon as I get the loan, I'm making the payment for them. But you have to understand, it's still a loan, right? And now school loan is a little bit different. They judge them a little bit different from all the other loans. So long as it's current, it's not really affecting the score. You're awarding a certain score for it. However, anytime if you have a student loan that's there for a long time, obviously you're going to see the balance is higher than the actual loan. Maybe you get a $30,000 loan, now your balance is $36,000. So as a formality, if you co-borrow with your child, my recommendation is making payments on it upfront, and then at one point having the child, when they obviously start working, to start making payments themselves. And because when you co-borrow with them, it's still your loan, just as it is their loan. Just like the other lady was talking about the car, it's still your loan as theirs, unless your name is removed off of it. And they can refinance that later on too, and take your name off too, by the way. So that's also possible.
Okay, thank you very much.
All right. Anybody else? We are right there. Okay. So thank you all so very much. I think we have a really good participation, and I'm hoping everybody got something out of this you know, the power of FICO Score. Now, what I do want to let you guys know about the elements that you get, you know, we'll talk about prince and princess lifestyle. You know, I'm not trying to be, because I share with you guys, you know, my challenges, especially lately. But having a good score and having a good credit really does help. I literally took, I don't know if some of you are on social media, I took my wife on a birthday to Universal Studio, and we stayed at a Hilton at Universal Studio, and it didn't cost me a dime. I just used my Hilton 100 points. We flew to Houston, or we're going to be flying to Houston, and I bought the tickets. And again, it didn't cost me a dime. I just used the points. So the benefits of keeping good credit, and then when you get really good with the credit, is finding the credit that's going to work better for you. You have you know, Marriott card, you have, you know, some, you know, every credit has element of perks you can get out of it, you know, by using it. So you use it and you collect points off of it. And now you have, you know, a more bigger lifestyle. My daughter was sharing with me, she's been going to, she's been flying around quite a bit. And I'm like, you know, all this flying you're doing, how much is that? It didn't cost me anything. I haven't paid for a flight in the last 2 years. I'm like, holy moly. No, she's using a lot of her mom's credit because of that. But that's cool. But you know, those are the perks of having good credit and just channeling to different product that you normally use. I'm a vacational type of person, so vacation is really big to me. But you know, whatever that is, those are the things that extend. You know, when people can see you say, "Whoa, this guy flew to New York like that," and they didn't know. And I'm flying on Comfort Plus, and it still did not cost me anything. I paid like $17 extra fee, or whatever that may be. So it's really beneficial when we pay attention to this thing. And I'm telling you, as a student and a teacher of this, it's been very rewarding when I started teaching on how to get to this 800, because I never had 800 before. And I started teaching it. And of course, you start applying what you teach, and you get there. And it's like, wow, this is beautiful. So I really want to see a lot of us get there. And please feel free to check in with me. Like, Gary, what do I need to? I've called for people on a three-way line with their credit company and settled their collections. I had this young man came to my office one time. His credit was like 580, and I looked at this. You know, I had Fernando print out his credit report, and I looked at it. I said, "Dude, you're not bad at all. You just have these two collections that stings you really bad." And it was both medical collections. And we called in. I said, "Do you have $1,000 with you?" He said, "Yeah." As we called in, and we have it one taken. We settled on both of them for less than $1,000. One of them was $3,600, and the other one was like $2,400. And we got them down. Both paid for about $1,000. And literally the next month, his credit went from 588 to like, you know, almost 690. So it's just those little things that we need to be made aware of to change our lifestyle. So I hope it's really.
Hey guys, Gary, I gotta go. I got some people here, but if there's any questions, let Gary know and you can forward them to me. But thank you guys. Appreciate it.
Thank you. Thank you.
All right,
Thank
so
you.
here comes a Ringo. Let's go with this.
Gary, there's just one more question in the chat box.
Oh, okay. What is that? What does it say? Please, I can't read it.
Wait.
See.
From Mackenzie.
Okay.
He's asking if I extended all my credit cards to high limits and I'm only making the minimum payment, would you recommend one of those debit consolidation loans or paying off one by one?
Okay, so let's first understand what credit consolidation loans does. Okay, it's one of those situations where it's going to go from worse to good. So when they consolidate your loan, they ask you to pay a fee, and they ask you to put up money into the account. Put some long payments into the account. Meanwhile, you stop making payments on those credit. So when you stop making payments on those credit, your credit go really bad. Now you're 30, 60, 90 days late. And that's how they can settle the account. They need it to be, what do you call it? What is not coming to my mouth? They need to be late in order for them to settle it. So, and then they can now call those lenders and settle it for 40% of the amount. That's a tough place. Instead of doing that, I will get a personal loan and pay off or settle those accounts myself. And then pay, because with a personal loan, if you can get a personal loan, it's a much better way. You have one loan that you're going to be full on, but a loan is rated differently from revolving credit card. Our scores are actually rated mostly by our revolving credit cards. So now you can pay off all your credit cards, don't close them, pay them to zero, and then focus on making a monthly payment on that personal loan. I think that's an easier way to go. Otherwise, you're gonna go from good to bad to worse, and then it's gonna come back later. But I don't like anything that's gonna inhibit you from achieving your best life in the next 12 months. And that's what that is saying. It's gonna take a 12-month turnaround, for that. All right. Okay.